Very good morning, friends, traders. Nalnakshi Swami, welcoming to my channel, Smart Index Edge. It is my constant effort to bring in easy things for option buying because most of the traders are into option buying because the thing is because of little less money used for that. So option buying, I tried everything. So today I'm going to tell you about one moving average that is very, very helpful for the option buyers. Option buyers need sharp moves. Unless there is a sharp move, there will not be, they cannot make money. Only when there is sharp move in the price in one direction, option buyers can make money. But the thing is, it is very difficult to find the direction for the people, for the amateurs to be in right direction. So this moving average helps to spot when the price is starting to trend strongly. And it adapts to volatility, meaning it becomes more responsive when market starts to move fast, just what option buyers need. During sideways choppy markets, this moving average moves lower, signaling you to stay out or wait. So I'm talking about the variable moving average, which is useful for option buyers to catch early trends, avoid choppy zones, and ride momentum. So completely relying in alone is not good, but combined with the support and resistance, volume, or RSI, and price action is for better accuracy. For example, how it is constructed with this variable moving average in layman terms. Imagine you are driving a car on a highway, you drive fast. In a traffic jam, you drive slowly. Similarly, this variable moving average behaves like a smart driver. When the market is moving smoothly in one direction, that is in a trend, this variable moving average becomes fast and responsive. When the market is messy and directionless, choppy, variable moving average becomes slow and cautious. So, what you need to do is check how much the price has moved overall in the last few candles. Compare it with low, noisy, or jumpy movement that has been. If price moved smoothly, a variable moving average says, let us follow fast, like a trend. If price moved up and down, too jumpy, variable moving average says, slow down, let us not get trapped. Then variable moving average adjusts its speed and gives you a line to follow, not too fast and not too slow. Just right for the current market mood. So final summary is this variable moving average is a smart moving average that speeds up in trends and slows down in sideways moves. For option buyers, it helps enter at the start of a strong move, avoid time decay during choppy zones. So always use it with price action, volume, or RSI for better trade decision. This variable, if you go to the indicator section, if you type in VMA, you are getting variable moving average by lazy bear. You can apply this. When you apply this, you get this is the variable moving average I have applied here, and the VMA length is 6. If you uncheck this, it will be a simple black line. If you ask for show trend direction, it will give you trend direction. When it becomes slow down, you can see when the market is slow down, it has become flat. So it has become slowed. This moving average has slowed and it is showing blue color, halt signal. And if you check color bars based on the trend, it will give you green color bars and this blue color bars. That is, it is an halt. Blue is an halt. So like this, you can utilize for call option, or if I go to the put option, 24,800 put option, it is showing clearly, it is showing downward move. And it is an heart. Here, blue color thing is an heart, and then the trend is down. Like that, you can make out. For example, if you go to the, I'll go to any crude oil like that, crude oil futures. Let me type in crude oil. Futures, because option chart is not available here. See, crude oil yesterday, it was up till 545. Later, the trend started changing. It is coming down. So it started showing you that trend is down. The colored bars are red colored, and this is the red color trend. It is showing red color trend, and the blue color is the halt thing. That's how you can make out and trade better. It is very good for option buying. Let me go to the option chart of Nifty. Option chart of Nifty. Let me go for which call option? Options. And anyway, we'll call option for 24,800 call option. Let us see whether it is. So it is clearly showing it is, see, through along the time cycle, it is going. And I was applying for the initial anchored VWAP as a support and resistance. This is a high one on the 5-minute chart. Okay, let me apply the anchored VWAP on the 5-minute chart. Let me tweak it to low. See, this will not move like along with the price. I've anchored here, and sometimes you get confused when market starts coming down. Anchored VWAP is slower than this variable moving average. So variable moving average is moving along with the price, adjusting along with the speed of the momentum. In this way, it is superior for the option buyers. Option buyers can utilize that along with the confirmation of volume also. You can use the volume. I am not taking the example of the volume or anything. Simply, I have applied the volume moving average. It is superior than a simple moving average or any exponential moving average. So you can utilize this adaptive, variable moving average is nothing but adaptive moving average. So this is how you can save, and you can see in the opening bell of the market, there will be momentum which is suitable for the option buyers. That's how I made a 5-minute trend strategy lasting for 1 hour. You can utilize this variable moving average to find the trend as well as the momentum loss also. You can see here it has become flat and the colored bars have changed to blue. If it is in a downtrend, trend is up and this is choppy, blue color. When it becomes trend is down, even this when it becomes choppy, it becomes blue. This is how opposite you can utilize for option buying. I feel this will help you more in option buying. You have to decide yourself whether to be in put option or in the call option. And by seeing the underlying, putting on to the underlying also, it will show you whether the Nifty is underlying is rallying or it is slowing down. That is very, very essential. When it starts slowing down, that is the most important thing. The option premiums gets decayed. So in that period, it cautions you stay out of the market. Thank you very much, friends. Nalnakshi Swami signing off.